Now, we've got ourselves a heck of a main topic for episode 125. It is actually talking about Michael Saylor, one of the most well-known characters in the crypto industry. He is known as a Bitcoin maximalist, and he recently came out on a podcast with some daring words about Ethereum and any other proof of stake or ICO-based coin. And that is specifically that he believes they are securities, of course. That's a big deal coming from Michael Saylor. He obviously knows a lot about this industry, knows a lot about the underpinning technology. And in this case, his belief is that, in fact, Ethereum does break the securities law in terms of the Howie Test in becoming an investment contract, unlike Bitcoin, which he believes, and as the IRS has already acknowledged, is seen as property.
Yeah, no, this is really interesting. I mean, as you mentioned, Michael Saylor is a Bitcoin maximalist. What do we mean by that? Well, he's the CEO of MicroStrategy, which is a tech company that came through the tech bubble and boom of the 2000s and has built a strong company behind it over the last 20 plus years. And recently he came out, I would say 12 months ago or 18 months ago, something like that, announcing that he was putting serious weight in the company treasury behind Bitcoin. They've bought billions of dollars in Bitcoin, or millions, I don't know, a ton of Bitcoin at a price average around 30,000. And it seems like every time Bitcoin's dipping, this guy is diving in, buying more, and driving conversations around cryptocurrency and having Bitcoin on your balance sheet as a hedge against the dollar or some of these other strategies. He's been super vocal in support of Bitcoin adoption, of El Salvador and what they're doing with legal tender and Bitcoin and cryptocurrencies. And so it's been fascinating to see that. And it's, again, interesting to see this divide between those that see Bitcoin as property, potentially suggesting it's a commodity. He said, quote, it's a common good or beyond the control of a company or group of individuals. And that was a big thing for him, is that this kind of decentralized aspect really is what created that value for him in seeing it not as a security as opposed to some of these more cryptos. I think there's really two pieces we can dive into here, Herwig, around maybe why these things might look or feel like a security. The first one being what he mentioned there in terms of proof of stake. You have a group of delegators, a group of individuals that make control and decisions over the entire network. It's no longer this decentralized process where anybody can make decisions and anybody can participate. And now you rely on a elected group of individuals to make those decisions, which does start to feel a little bit like a group of individuals that you're investing in, that their decisions could result in economic gain for you, which is something that's specifically noted in the Howie Test that could be a security.
Exactly. That's the key word here, the Howie Test. Unlike with Bitcoin, where miners are putting up their own equipment and they're doing their own work to participate in the blockchain network, with a proof of stake model, there's not so much activity in terms of what your personal participation is. And that's why you said it. You nailed it with this whole common enterprise thing, the Howie Test, which is what the SEC uses to determine in the courts whether or not something is a security, is comprised of three prongs. The first is the fact that you are investing in a common enterprise. You're participating in something that which leads to the second prong, is being done through the efforts of others, leading to the third prong in order to create a return for you, hence an investment. Because you are no longer actively, earning the yield yourself or the interest. And in fact, a third party, whether it be a blockchain network or an organization or an individual, is in this case potentially becoming the provider of the interest that you're here to get. So that's the specifics. That's the Howie Test that the SEC is using in order to go after Ripple, in order to go after many, many other tokens and ICOs and proof of stake platforms, potentially for that very reason.
Yeah, no, you hit the nail on the head. And with proof of stake, you mentioned this term yield, and this is important too, right? Not only with owning a proof of stake, cryptocurrency or token, may that token appreciate in value because of the benefits created by others, which again, that alone could potentially seem like a security. But then there's also this component of staking. And so this idea of staking is essentially locking up the assets that you have. If you have Ethereum or you have a different cryptocurrency, you can lock it up into a protocol or into a platform. And in exchange for that, you get an interest rate on the asset that you've provided. So I might be able to lock in my Ethereum and get 10% back per year in rewards and fees that are generated by the network. And so he also made a point to suggest that that does start to seem like it's cash flows. Right now, you're almost getting a dividend from this network, from these individuals that are creating this platform and opportunity. And again, that's another piece of this puzzle where you start to say, okay, well, you've got a group of individuals that I'm essentially investing in that are going to be doing work on my behalf for my money, and I'm getting appreciation for it. And I'm now, driving a yield or driving a return on that investment by, staking that or putting that into a platform. You're starting to see this looks a little bit like cash flows, maybe some dividends, and he has a point.
Definitely, I think that's the argument that he's making. That's the argument that many other attorneys, as well as experts in the space, as well as the regulators, both the previous SEC chairman and the current chairman, both have mentioned several times that most of the coins and tokens that they see in the space today qualify as securities. So that is a very, very big deal. In fact, I think it was a great breakdown that you made of proof of stake. And more importantly, it's really about the fact that we've seen in the past the SEC already go after other products or coins in the past, right? And specifically with Coinbase, they tried to launch a lending product open to their retail user base. But unfortunately, the SEC showed up to their door almost with an unannounced notice. They call it a Wells notice saying, hey, if you launch this, we're going to go after you. And of course, Coinbase was not happy about that because they invested a lot in believing that this product wouldn't actually qualify as a security, yet still the SEC thought that it would. And now similarly, Gemini as well as Celsius also are being looked at as potentially similar problems for securities with their lending products. And then, of course, we've got the Ripple case, which is now being, currently underway with the SEC and being played out in the courts. That underwent its own ICO. So, the idea that there are tokens out there that could be securities, and if found as securities, they would have to come into compliance, which means KYC, AML, potentially, filing with regulators and registration. All of these things become extremely onerous, potentially to the point where it downright kills the value proposition of some of these cryptocurrencies. So that's why this is a rather big deal, and why it's a rather big deal that's, a big name is coming out and saying, once again, Ethereum is a security.
Yeah, it's fascinating. It also could explain partially why Gemini is exploring an ATS, right? Aside from the fact that they see the value of security tokens, it also could protect them against future regulation around cryptocurrencies. If you deem them as security, now you need an ATS license and a broker-dealer's license in order to facilitate that transfer. So it does kind of offer a little bit of protection. But maybe I want to take 1 minute here to close out the episode and talk a little bit about the counterpoint, right? What would an Ethereum, individual that loves that platform and somebody that loves crypto, we've been in this space for so long now, we're not here to stifle innovation. So what might somebody on the other side suggest are reasons why it's not a security? And so I think that this decentralization component is really the big one that we look at. So you've got the Reg A Plus by Stacks, where they specifically said, we're going to be raising money compliantly, but we believe our network is decentralized. Once we have what they called sufficient decentralization, which really hasn't been defined, but they were able to successfully get an approval saying that once they reach sufficient decentralization, it is not a security. And Stacks, which raised 30 million or so through Reg A Plus, is now trading on crypto exchanges despite using securities exemptions to onboard their investors. So I think this decentralization concept is really where an Ethereum maximalist might suggest that it's very different, right? Because the Ethereum itself is used inside of the network to pay for gas fees, to incentivize miners to put transactions on chain. It's used as currencies and as a base trading pair in many different assets and NFTs and all these different things. You use the Ethereum, you really do. It does have real world utility in terms of minting NFTs, in terms of sending transactions, in terms of leveraging smart contracts inside of the platform. And so I think that if you have any other thoughts that jump in, that's kind of, I think, the angle that they would try to argue.
I think that begets the question of, okay, well, can a coin offer multiple purposes? Can it qualify
Right.
as multiple things? Despite it offering utility, can it still be a security?
Right.
And that's what they're looking at. And I do agree decentralization is one big point of it. We've seen a previous CFTC commissioner go out and say that Ethereum wasn't a security because of this decentralization. And indeed, the compliant ICO model is a workaround. So that if you are willing to play with today's rules, you can potentially still go to market with your original vision. But more importantly, I think with proof of stake is this component of return. The idea that you're being promised for staking some kind of an interest, right? There's a reward as to why you would lock up your token and not trade it whenever you want. And for that, I think the SEC is also going to be looking at it closely to say, okay, is this an expectation of profit right here? And that's possibly one of the only prongs needed to go ahead and start making a case.
That's absolutely right. Only time will tell. I think that the industry only benefits with more clarity and more definitions by the regulators on how these things should be treated. I think, honestly, some of the biggest problems are the fact that we don't have a ton of guidance in terms of the cryptocurrency space, so no one is fully sure how these things are moving forward. But props to the SEC for helping BSTX prove the way in terms of securities. That's what we like about embracing securities, is that the laws around securities are pretty clear as long as you follow them the way that you should. If you treat every asset like a security, there is some level of clarity and you can move forward on a lot of these different things, which is why we love dealing with security tokens.
We have to remember that regulators are only doing their job trying to enforce current regulation and laws. We need legal changes to happen. We know that potentially next month we've got the Biden administration coming out with some kind of a crypto executive order that might make sweeping changes. Who knows what's going to really level the playing field out here. But for now, the experts will continue to weigh in with their own opinions. In this case, Michael Saylor thinks that Ethereum and potentially other proof of stakes could be a security.
So with that, thank you so much for watching. Check out the What's Drippin' newsletter. It's now Monday and Friday for all of your newsletter needs and security tokens. We've got the Security Token Show here on YouTube that comes out every week. We've got Spilling the NFT, which just launched. If you haven't checked it out, Megan and Jessica crush it. And we've got a whole host of great content on STO Market, blog.STO Market. We've got new shows coming out on YouTube. Follow us on Twitter, Instagram, anywhere. Links in bio. You got to catch it all.
We love feedback. We love suggestions. We love comments. Please, Kyle and I are on LinkedIn, on Twitter. We're active in our Discord. Please come join us and reach out to us. And meanwhile, we hope to catch you next Monday, and happy tokenizing.